Okay, let's go. So this is example on NAS 100, but by the way, this works on forexes also. So these are the 45-minute cycles. This is midnight, okay, and from midnight you can do it all the way up to another midnight. It does not matter, okay. So, but what are the best cycles? I would say one of the close to the midnight. So here we have 45-minute cycles, which is A M D X, and then again A M D X, and then again A M D and X. And you can look at the way like this: AMD, 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 and AMD. So you can look with AMDX or only AMD. So X is a reversal or continuation. Now, let me just show you. Okay, so if we take a look at the way AMD only without X, AMD, AMD, first cycle, accumulation cycle. Price takes out the low, expecting price to move to this high, and in some time that happened, and we could actually cut nice trades at the distribution phase. And we have again accumulation phase. Price took out here, price took out the accumulation low, expecting price to move higher, and that happened. We would already collect profits in manipulation phase. And distribution, we have here accumulation phase, price takes out the high and creating a manipulation phase and moving lower, distribution. Then here again accumulation, price takes out the high, didn't get any market structure shift. Here we did, but here this thing failed. But let's see how it look like. I mean, this is, you can trade based on this, but this is more like to draw on liquidity, something really interesting I will show right now. And instead of AMD, we can look at the AMDX. So accumulation, price takes out the low, manipulation, distribution, and then reversal or continuation is X. And again, accumulation, price takes out the high, manipulation and distribution, and then X, continuation. Here we have accumulation, price takes out the low, manipulation and distribution, and then X, continuation. So which one works the best? In this example with AMDX you can catch bigger trades, but AMD, yeah, here, so here it shows same results. So now if we clear the chart and this area right here, 45-minute cycles, it does not matter which I pick, I'll pick this one. 45-minute cycles, we can split them into smaller cycles. In 45-minute cycles we have 15-minute cycles, which also creates power of 3, AMD, and there is no AMDX, only AMD. And by the way, this call is recorded. So you have accumulation, manipulation, distribution into the 45-minute cycles, and this creates 15-minute cycles. And if we take a look, price takes out the low of the first cycle, that means drawn on liquidity is up here, price pushed to that level. Price takes out the low of this cycle and it went far below, that means a lot of people would think, oh, price will not push to this level, and guess what happened? Price pushed to that level. And these cycles, I wouldn't say this is for trading, this is more for having drawn on liquidity, and drawn on liquidity is liquidity level where price has really big chance to pushing to. For example, price takes out the low, let's say we have our own model looking for long here, and then target, we have perfect target right here of the cycle, and then bam, hitting that. Price taking out the low, and after that drawn on liquidity, high, boom, creating accumulation, manipulation, distribution. Here price takes out the low, and after that this is drawn on liquidity, price takes out the high also. Here price takes out the high, looking like price is not gonna return to our drawn on liquidity, and guess what happened? Boom. Here price taking out the low, it seems like it's not gonna return to a drawn on liquidity, but it did. So we can say accumulation, manipulation, and buying in manipulation. Target, what would target be? Well, drawn on liquidity right here, drawn on liquidity right here. So this is really powerful because you can have areas where price is going to push to by the end of the day with a really high probability. And same thing everywhere. Price takes out the high, push to the drawn on liquidity low, accumulation, manipulation, distribution. Here, price takes out the high. It seems like it's not gonna push to the low, but actually did. I think I have example. So now we have the 15-minute cycles. Now we're gonna zoom into this 15-minute cycles. This is 15-minute, 15-minute, 15-minute period. Okay, and now we can these 15-minute cycles split, and then we get 4-minute cycles. Let's see what 4-minute cycles create. Also AMD, and also there is no AMDX, only AMD. I mean, you can actually go with AMDX, splitting it right here, but if I set line right here, it will be bigger mess. So I'm going with the AMD. Same thing, price takes out the low, having a drawn on liquidity up here, boom, takes out the high. Accumulation, manipulation, distribution. And there is a strategy how to trade this, by the way. I made the strategy how to trade this, and I will show that in future calls. It's really interesting for scalps, like, I mean dead scalps. That means you can end trade in like 2 minutes, 3 minutes. So yeah, and this is more to trade like on 15-second, 30-second, and 1 minute time frame. You can on 5, 1, 2, 3, 4. Yeah, I mean you can on 5, but it wouldn't make any sense. So yeah, price takes out the low, bam, takes out the high, accumulation, manipulation, distribution. Price takes out the high, expecting price takes out the high in the 40-minute area. If it would take out the high after in a new 40-minute cycle, that wouldn't be good. Then we cannot validate this as drawn on liquidity. Price takes out the high of this cycle right here in 40-minute cycle. That means this is our drawn on liquidity, and that, as you can see, price after some time pushed to that level. Okay, here price takes out the low and push to the high, accumulation, manipulation, distribution. Okay, then we have here price takes out the high, and then drawn on liquidity is low, price pushes to the low, accumulation, manipulation, distribution. Now some people wouldn't classify this as high, some people would classify this as high, but let's see what would happen. Price takes out the low, that means drawn on liquidity is up here, that means by the end of the day price will hit that high. So that means on lower targets we can look for buys at our model. For example, price sweeps 9 AM low, we can look for buys, but what target? This area right here. And let's see, yes, price actually hit that area by the end of the day. And let's say, for example, price sweeps the low of accumulation cycle down there, buy at the fair value gap, long here. And what should we target? High? No, exactly high of the drawn on liquidity, which is our untouched high of the cycle. And look at that. Okay, so now here, same thing. This is now where it gets really interesting, and this is now where y'all should take notes, because this is something really important now. Price takes out the high and pushes to the low. Here, price takes out to the low, and drawn on liquidity is up here. Guess what happened? By the end of the day, price hits high. And now, look at this. This is now where data look back period is in game. Okay, so if we select random candle, okay, random candle, in this case this candle right here, that's 8:30 for example. Some people are trading 8:30. It does not matter what are you trading, it does not matter what candle you select and what time. Let's say for example we selected 830 candle, because that's like something like strategy. People are trading based on 830 power of 3. 830, should we look for longs or shorts? Data will tell us right here. 830 candle right here, 830, we go back at 61 bars. That's 325. 325, what is showing us? Price going strongly down. 325, price going strongly down. What can that tell us? That after 830, price will go strongly down. So now, sweep, order block, 1 minute something, and then we can expect strong push down, taking out full liquidity right here, taking out some lows right there. Before that we have also lows, price taking out strongly all those lows, same like here, all those lows, and guess what? Creates a low, breaks a low, creates a low, breaks a low, and then guess what? Market structure shift higher and higher prices, market structure shift higher and higher prices. So it's repeating. And for example, here, this is something I realized that it's really interesting. So here, random candle 16:15. This is, I promise, random candle 16:15, 61 bars. What do we have? Price taking out the liquidity, and the next three bars pushing higher. What do we have? Price taking out the liquidity, and the next 3 bars creating a significant low and pushing higher, taking out drawn on liquidity, taking out drawn on liquidity. With a strong momentum, only big bullish candles. Same thing right here. This is something that's really interesting, and I'm not done with this. It's getting even deeper. Okay, here again, price taking out the high of 15-minute cycle, drawn on liquidity, low right there. Look at this. At the time price swept, with the candle that price swept the high of 15-minute cycle, was at this candle right here. And from this candle, 61 bars, looking at the like history, 61 bars, look back, we can see that price swept liquidity right there, some small liquidity area that price swept. Really interesting. Okay, and then we can see small push higher, and after that strong push lower. Okay, what is that telling us? Goes a little bit up, like here, after sweeping liquidity, then strong push lower, and look at this. After a sweeping liquidity, price went 16 points up, 16 points up, around 16 point up, and then reversal to the downside. If we're measuring at the sweep, 16 point up. This is the level. This is the level, guys. Wow, this cannot be random. And again, strong reversal, range, then a reversal, range, then a reversal. And also, what could we know here? After sweep, price taking out again high, sweep, price taking out again high, and then this is so interesting. I'm gonna test this more, but yeah, this is looking so interesting. And for some reason, price went back again to that level and pushed lower. I don't think it's because of the special level 16 points and stuff like that. I think this level is used as liquidity sweep and then low. But yeah, it's really interesting. Also taking out the high of this cycle, high of 15-minute cycle, and then pushing lower. Now the logo. Okay, this is really interesting. Now the logo. Okay, we have this normal logo that we use, but if we split it to the half, let me now show you something. From the midnight to the midnight, price is doing something, following the every small circle right here. Here's the proof. Okay, here, following the circle, maybe it does not seem like it follows circle here, but it did. How do you know? Because price was going lower in a small like circle area down there, crossing at 3 a.m. At 3 a.m. is crossing. That means it should price should give us next circle crossing. Then again, 3 a.m. reversal. We got next circle. As you can see, price creating circle. We have, I think this is, I don't know what time this is. I think this is 4:30. Price ending the circle, expecting reversal and creating another circle pattern. What do we got? Ending, reversal, circle, 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 circle. 12 a.m. price changing the order flow to the bearish circles. Boom, boom, boom. Okay, so if I put these circles closer to the chart, we would get this. We would see how price is touching beautifully circles, and then at crossing creating a reversal point. Now let's see if we would take trades based on this. Okay, this what we would got: 1 2 3 4 5 6 7 8 9 wins and 1 loss. Okay, so this is not a strategy, this is something that's market doing, and this is example if we would take trades based on this. Okay, so why not buy right there? Because circle ending. And why not buy right there? This is too close to midnight. What does that mean? Accumulation, manipulation, distribution. Yes, you can use this 15-minute areas that price creates as a, I think this is 45-minute cycles or something, I'm not too sure, but yeah, you can label out the times when these small circles are crossing, and then you get accumulation, manipulation, distribution. Okay, so I'll go over that here. So let's say, for example, we want to buy at this time right here where circles are crossing. Stop loss is 30 points. Let me just go on a chart. Yeah, I mean, this is actually NAS 100, but it works on EURUSD. I mean, it does not matter. This is
actually one strategy. It has to work in every fucking market.
Yeah, exactly.
It's the market,
Yeah.
Up, down, up, down.
Yeah. So yeah, I was testing this actually on Bitcoin, the 9 a.m., 6 a.m., 12 a.m., and I'm not gonna lie, it's working on Bitcoin even. That's crazy. So, and also price respecting circles. So why wouldn't we buy here? It's because here's accumulation, we need to see manipulation, and if we would buy it here, we would get manipulated, and then we couldn't catch the distribution. So first, areas not buying. Here, for example, we got accumulation, bearish manipulation. That means we can expect bullish distribution. Buy at the time, 30 point stop loss, 1.5 hour win. Here 30 point stop loss, 1.5 hour win. Here buy, 30 point stop loss, 1.5 hour. Here buy. And why here sell? This is 12 a.m. order flow is changing to bearish, and then sell. Same thing here, 30 point stop loss, bam bam bam. Here would be a loss, but I would not recommend trading after 12 a.m. because volume dies here, obviously. So now this is 4 hour power of 3. This is something also you can use. We have a 4 hour candle right here. This is 4 hour candle open. Accumulates, manipulates, and distributes. Okay, how can we use that? Okay, let's say for example this is 9 a.m. high, again open, accumulation, manipulation, distribution, nice setups, IFEG, market structure shift, something. Okay, now how can we use this? This is a NAS 100 example, because most of the time you can see more SMTs on NAS with ES than SMTs on EU with GU. So yeah, that's why I'm showing a NAS100 example, but you can use this on Forex also. So this is like Apple setup 45-minute cycles. Okay, so from 8 to 8:45 is accumulation phase. We can see that basically price is accumulating. And then we marked out the high and the low of that cycle. Price taking out the high, this is 1 minute chart. Price taking out the high and taking out extra liquidity above. Okay, so entry would be at CISD or a market structure shift. Okay, so we have accumulation, manipulation phase, price creating SMT with ES, hitting into a higher time frame order block. It can be fair value gap also. We have 930, price manipulates also, creating SMT, breaking the low right here, creating a market structure shift right here, and that means we have accumulation, manipulation, and we can expect distribution lower. Okay, where would our entry be? At this fair value gap right here, singular fair value gap in hold this move. This is how trade would look like. Short, taking out the profits at cycle low, accumulation low, and now we didn't have to, I mean, the confirmation was we have manipulation at like 9:30 distributes lower right here. That means 10 a.m. will continue going lower, which happened here, but it's safest to close at the cycle low, so this would be the trade. Okay, by the way, this call is recorded. So again, if we use 61 bar data, at the time price created SMT, tapped into a higher time frame order block. At the time we should look for entry. How can we confirm that we would sell? 61 bars right at the area where we would like to enter, before we would like to enter, 61 bars period. What is showing us here? Push lower. What do we got? Push lower. Okay, so we can look like this. Candle before end of the cycle even, 61 bars, price sweeping liquidity up and pushing lower. Price sweeping liquidity up and pushing lower. Showing some strong candles which we got here, hitting cycle low. This is some confirmations you can use. This is today actually. This is trade on demo because I take only A+ setups and I usually don't trade NAS100, but maybe in the future I will, because 9 a.m. on NAS100 is incredibly beautiful. I mean, it's beautiful working. So here, this is 9 a.m. high sweep. Here we have 30-minute candle. 30-minute candle opens. We have accumulation, manipulation. Price creates a market structure shift, leaves fair value gap, and entry at the fair value gap. 9:30 pushes lower. News taking out 9 a.m. low. This could be a nice trade. This is how 30-minute candle looks like, and confirmation 8:30 line right here. Accumulation at 8:30, manipulation, and then we have 9:30 pushing lower. Accumulation, manipulation, distribution, also 9 a.m. high swept. So that would be it. When it comes to trading 9 a.m., you can enable 4-hour candle to see where actually nice manipulation is. From midnight to 9 a.m. is manipulation, and from 6 to 9 is also manipulation. You can mark that as accumulation. Sorry, accumulation, not manipulation. So yeah, and then look for break, manipulation, and then distribution. So that would be it for this call. I showed a lot of interesting things, data, and stuff like that. This was really interesting. So yeah, this call is recorded, by the way, so I will post it today right after I end this call. So if you have any questions, you can DM me or ask actually right now in the chat or something. So by the way, yeah, I hope y'all like the call. That would be it.
Thank you.
Yeah.
Thank you so much for the call. Do you think that the levels of logo are the price reacts to them more significantly than to classical
these levels right here.
Like levels of the logo, you know, or of the previous day of the logo. Of the previous
Oh, with like Enigma 2.0.
Yeah.
Oh, so when we have Enigma 2.0 high of the day zone, and we have Enigma 2.0 low of the day zone, press tabs into low of the day zone and pushes higher, that zone is still valid for the next day. It can serve as some PDRA, some confirmation area for buy, but again, current day Enigma 2.0 zones are stronger. And when it comes to this zones right here, I will show you some beautiful example. Give me a second. This is really interesting. So the placing of the logo I do from midnight to 12 for more PDRAs. I mean Enigma 2.0. I mean normal LTF Enigma levels. We use from midnight to 1:30. Midnight to 1:30. This circle right here. We marked out the low and the high from midnight to 1:30. This is the low and this is the high. High is closer to midnight. That means we are gonna use the low because low is far from the midnight, farther than more far than high. So that means we marked out the low and we place the low matching with the low of the circle. So for example, we have low of midnight from 1:30, and then we have to match it with the low of the circle, like this. That's how you place the logo. And why this low? Again, this high is closer to midnight. That means no, this low is far from the midnight, this low. And now we have these zones. Let's see how these zones reacted from next day. Looking really interesting. And look at this now. This zone right here. Let me just... This zone right here. Look what happened. This is amazing. This is potential high of the week, by the way. This is absolutely amazing. Creating a power of 3.
So here for example, there is no maybe there's no even PDRA or anything from the ICT that can tell you that here would be reversal, but the logo will tell you.
Exactly. That's why, I mean, isn't just crazy that you can predict when the high of the day will be created with level that's not based on chart, with level that does not has to do with engulfing candles, fair value gaps, or anything. So that it's just crazy. And also this levels right here worked from today. Actually today, beautiful reactions and everything. This is data high. Oh, this is looking messy. I mean, yeah, this is data high again from the previous days. Reaction crazy. So yeah, this call is recorded. I'm gonna just stop